The dealer's bracket is just these exceptionally large areas. Now it changes. I mean, there's not just one dealer's bracket, guys. There's obviously some high volume levels, but generally when we reach thresholds like this, we start looking at that threshold and say, right, the dealer's bracket 65.71s. So the dealer's bracket's about 6 points wide. 6 points wide means that the fair value price is 3 points below that price. 3 points below that price. Originally the dealer bracket was 70, okay? So I started to do a bit of business off the 70s. Usually they run the dealer's bracket to see if there's any buyers at higher prices. When you see it jamming like this, you start dealing hard. Okay, so that was my actual trade was here. But when the price starts dropping off, the target price now was obviously the original 67 halves. We've just traded 67 halves. We've just traded it, guys. Well, the 10 points at the time when I made the comment, Miguel, the 10 points was 70.60. So the dealer bracket was running 44.70, 44.60. And the reason why I mentioned that was because the price was trading 70 at the time. So I'd taken a couple of scalp trades off the 70 here, managed to get a couple of trades off at 69s, managed to take a 4-tick profit, take it back up, and then the dealer bracket moved up into 71s here. So the dealer bracket moves up to 71 halves, down to 65s, and then the next trade is selling into that 71 halves, down into 65s, and obviously based on that, the fair value is going to be what? 6.5 points, right? So 6.5 points, 3 points off that gives us a fair value of about 68s. And obviously that's when we start looking at that as a possible profit take on the S&P. Yeah, pretty obvious stuff. Pretty obvious stuff. So kind of fair value book just now, but I think we're a little bit above fair value just now. It's 68s. Fair value just now, for example, 62s, bottom bracket, 69s, top bracket, 7 points, 3.5 points. Difference would put you into a 65.5 fair value. So a couple of ticks on that in terms of fair value just now. And we'll see about that price dropping down towards that 66.25 pretty soon. It's just done it actually, just spiked down there, guys. Just spiked down there. So there's the fair value. See it? You see how the fair value is obvious, Miguel? I just told you that the fair value is going to be down at the 66s, and the price just traded 66s. See how obvious it was? Fair value still 66s just now, guys. 66s fair value. The dealer bracket should actually be low volume nodes, to be perfectly honest, because obviously we are expecting rejections off the dealer bracket highs and the dealer bracket lows, shouldn't we? So the fair value should be profile POCs. So if I have a dealer bracket, for example, here, if I was to try and suggest what this would look like on a profile, I would suggest that that's where the high of the profile will be, and that's where the low of the profile will be. And as a result, what I'm expecting from a dealer's perspective is what the dealer's hope is going to look like is this, isn't it? That's almost exactly what the dealer would hope to look like, because they'll do two-way money in the middle at fair value. And they'll obviously hopefully get a rejection of 65s and push the price back up and again to fair value. So they'll constantly do that rotation. So remember what happens at fair value. Well, at fair value, of course, at this price here, anything above fair value into that dealer bracket high, sorry guys, anything above fair value into that dealer bracket high is going to be the dealer selling. Anything below that fair value into the dealer bracket low is going to be dealer buying. And you start watching for that rotation. You start watching for that idea coming into the marketplace to try and rotate it back towards fair value. And that's just fair value dealer trading. You recognize where the dealer bracket is. You recognize that as the price moves towards fair value at the bottom edge, you can start trading that as a narrative. Yes, absolutely. Absolutely. Now, let me just show you what happened there. I'll just show you exactly what happened again there so that you can see what I did. See if it's consistent, and that's important, isn't it? See if it's consistent, guys. Hold on a second. Is this trade here consistent with what I've just taught you there? Is this trade consistent? Yeah, because when you look at it, there's the dealer bracket high. There's the dealer bracket low. So obviously, if I was to do this as a profile narrative from the dealer bracket high to the dealer bracket low, what are we thinking? What are we starting to consider here? Profile, fair value prices. Yep. Fair value, sellers getting jammed on the way down. So I'm a buyer. To take it up to fair value, where I take my profits, right? As a dealer. So I take it up to 65s to take profits as a dealer. And then I just keep rotating those fair value brackets, right? I just keep watching those fair value brackets to see if I'm getting close to a fair value trade. And that's how dealers deal. They buy at the lows of fair value, and if the sellers keep coming, they pull away the price. They just pull away their price. And obviously, as they pull away their price, they adjust fair value, so they maybe come off a little bit quicker. So let's do a theoretical exercise on this. Remember, the dealer doesn't always make money. The dealer usually loses money on certain trades, and they just pull away and they just accept that that's the case. It's part of their game. Remember, they trade quantity over quality. We had this discussion earlier about what do you trade, quality or quantity. So if the dealers have got a bracket here, that's what they'll trade. So what will happen is the trade will trade this bracket, right? They'll see price coming up into these bracket highs. You'll see the price coming down into the bracket lows. Sometimes it'll go through the bracket lows and it'll come back up. Now, obviously, at that stage, the dealer's got a choice. Is the bracket still the same? Yes. So where's fair value? Fair value's in the middle. Okay? And what you'll see in these areas here is you'll see the dealers getting very active. There'll be a lot of red Voltics in this area. There'll be a lot of sellers getting jammed. And the dealer's making a decision at that point. Do I pull away that bracket or do I stick it out? Right? The dealer's dealing there. The dealer will always deal there. The dealer's dealing up here. They're making decisions. They're not trying to reverse the market, guys. Right? They're not trying to reverse the market. Think about it. It's only commercials that try and reverse the market. What the dealer's trying to do is to see whether they've got enough ammunition for the amount of selling that's coming in to take the market back to fair value. So the price comes back, for example, to fair value, and then what happens is the selling comes in. Now, obviously, if the dealer bracket is still there, they must think that they've got enough ammunition. But as the price starts to drop, what if the dealer does this? Well, usually what's going to happen is that sell order is going to drop down as well, isn't it? The sell order is going to be now there, isn't it? So where's fair value? Fair value is now around about this price here. So you're actually still above fair value, aren't you? You're actually still above fair value. So that means that there's still going to be sellers coming in for that trade. And obviously then you're expecting it to trade down towards the dealer bracket. And if the dealer bracket sticks around when that happens, you'll see that there will be a surge of volume at that price. They'll do business there. They'll actually do business because they think they can at least rotate it back to fair value, right? They believe that the selling is not strong enough. They'll rotate it back to fair value. So they'll buy, these are all levels that you then see this increase in volumes at. as you see this narrative developing and evolving in the background, you can start to recognize this process. Does everybody get it? Does everybody understand that as a process? It's actually a very good process to think about, isn't it? Just trade towards fair value. So what's fair value just now? 55.60, guys. It's a 2.5 pointer. 55.60 just now is fair value, yes? We'll take a screenshot before anything happens. And we'll do a little time series here. So you can see where fair value is just now. There's 50, 56. Some liquidity came in at 56. The big liquidity was 55. So the big liquidity, 55.60. Fair value, 57 halves. Fair value, 57 halves. What's happened since then? Well, if it goes above 57.5, what's going to happen? It's going to get sold. So it should be getting sold as it goes above this fair value, shouldn't it? You should start seeing it getting sold, so long as that fair value stays in place. What happened next? Next time series chart. What happened next, guys? A buyer got jammed at 58.5, nearly 59s, didn't he? So the seller actually came in here because of fair value being at 56s. Sorry, 57.5, right? So a seller came in at that price. Seller came in at that price there because of what was happening. You started to see that buyer getting jammed at that price. And where did it go? Fair value 57 halves. So you can see that the current dealer range is here to here, and the price traded back to fair value. Yes? So what's happening just now? Well, let's take a little screenshot. This is a 10-second chart, by the way, guys. So what's going to happen here? Well, that liquidity has stuck around as the price went up. So you're going to know that there's going to be selling coming in here, aren't you? You know there's going to be selling coming in at that price because the liquidity, because you're way above fair value, if the price trades up into that and it doesn't pull away up to this level here, then that's a sell trade. That's going to be a sell trade at 61s, 61 half, 61, 61 quarter. So you start watching for a sell trade at 60, 61 half, 61 quarter as a scalper, and then you do the next bit of business. Now, what happens if fair value changes the second you've done the business? Get off the business. So what happened next? Okay, so what happened at 61s where we saw that liquidity? The business got done. The dealers did the business, didn't they? The dealers took the trade on and you got a short trade. You see it? Dealers took the trade on and you got the short trade, but they then pulled their fair value price. So obviously you've now got short, you've taken the trade because that's where it was at the time, and now you've got this fair value read here. You've got a price at the top edge there of 63 halves, bottom edge of 57s, 6 points. Fair value is around about the 60 print, isn't it? So fair value is 60. So what are you going to do with that short trade? Clear it. You sold at 61s. You're getting offered 60s. Clear your trade. Fair value's pulled away. Now fair value's moving up. So you know this market must be bullish. They wouldn't have moved fair value higher unless the market was bullish. So they did the trade here, but they recognized too many buyers. So they've pulled that liquidity away from the previous screenshot. They've pulled that liquidity away from 61s, and they've driven it up to the 63s. And that set up an idea that the price is probably going to be bullish, and it's probably going to go up to 63s. And then at 63s, we'll make a new decision. You see how that works, guys? The dealers pulling and adding liquidity is an incredibly powerful piece of kit that you can add into your arsenal. That you can add into your arsenal. You can see that that storyline evolved. It's not a static storyline. It's a constantly evolving storyline, isn't it? It's constantly changing. And obviously we just watch it change. We watch to see where it changes from and to. We start reading it, we start seeing how they're pulling, and you can see it in real time, guys. If they pull away the liquidity as the price drops down, just now they're adding a bit of liquidity at 67s. So that seems to be a possible price. Now they've pulled it away just as it came to 67s, and they've dropped it down to 65s. So they're still thinking that they're not wanting to defend against this sell price at the moment. So they've got liquidity at 65 quarters. The sell is at 71s. Price is at fair value, right? 65 quarters, 71s, fair value middle. 65 quarters, 71s offered. 65 quarters bid, 71s offered. That's the story, right? That's the story. The inside market's noise. The real story is these key commercial levels, because if they pull away as the price drops, that's why they keep the price away from these areas, because they want a read on the way up to that price. If you were a dealer, you'd want exactly the same thing, wouldn't you? If you were a dealer, you'd want exactly the same thing. So they've widened their commercial trade now to 60.71 again, guys. 60.71. So where's fair value? Probably about 65.66. So you know that fair value for 65.66, that's where the trade's at just now. And obviously trying to sell down into that 65.66 would be the proposal that you'd have just now in front of you, because they're not pulling away that 70 trade, that 70 liquidity just yet. The price is upticking just now. The closer it gets, the more we get a better read. The more we get a better read. In other words, as the real liquidity gets closer and it starts becoming more relevant, we get a better read, because they're probably going to pull away that liquidity if they don't want to do the sell trade. As the price goes up, if they add the liquidity at those prices, you start going, okay, that's definitely going to be a sell trade. Now, surely to goodness, as the price is going higher into that liquidity, you're starting to think to yourself, no, this is definitely going to drop back down to fair value 65s. And that's the position we're in just now, guys. That's the current position. And you can become a floor trader, scalper based on that story. Well, maybe we cover that in classroom. Is that interesting to anybody, or is it kind of an irrelevance? If it's interesting, we'll cover it in classroom. And we'll look at it from a floor trader scalp perspective. The only downside, the only reason why it's a little bit troublesome is what? Just because of the lag. Simply that, guys, just because of the lag. And because we've got a lag on the screens, what I'm talking about and seeing at exactly that same point are probably going to be a little bit different. And because this is a fast changing story, you're going to have a little bit of a difficulty making sense of perhaps some of the things I'm talking about here. So you can see what I've been doing. I've just taken the trade, by the way, guys. I've just taken the trade. I've told you what the trade was. I told you it was 60.70. So what do you think I did, guys? What did you think I did? I've already told you what the story was, right? Do you see what I did, and do you see why I did it? You see how easy it was to make $2,000? So does it work? Damn right it works. I don't teach anything that doesn't work, guys. So you can see what happened. As the price was rising, this liquidity stuck around at 70, didn't it? It didn't pull away. It didn't pull away, did it? So that liquidity that I was talking about 70 area just there, stuck around. It wasn't exactly getting massive, but it was still pretty good, considering price was rising relatively quickly towards it. So as soon as I saw that liquidity sticking around, I thought, you know what, I'm going to take a punt here. Because obviously I'm teaching it, I want to make sure that you can see that I'm going to be doing what I'm talking about, so that you guys can look at it and go, shit, that actually worked out perfectly. You can see where fair value is. It's 71s, and at the bottom edge you can see it's 60s. So fair value must be this 65 print, right? Fair value must be about 65 print. And as soon as it hit that price area there, I've taken off the trade. The sellers got jammed on the way down at 63s, and I closed off the deal. Do you see how I can use this market narrative at the current market dealer's level? Now, you might be looking at that saying, yeah, brilliant, but it really was brilliant. And is it possible to call these in advance? What do you think, guys? Is it possible to call these in advance? Well, what do you think my tweet was last night? I wanted to show you how obvious it can be to be able to make those calls in advance so you guys can make some money. You see it? So when we look at it in advance, I told you what the commercials are running a 10-point spread at the moment on the S&P. 1208s. I told you what the trade was. The trade was 48.58. 48 is this bottom bracket here. 58 is the top bracket. So the sellers came in at 58s, and guess what? The buyers came in at 48s. That trade took place 8 minutes after the tweet. The tweet came in at this upright red line here. That's where the tweet was made. The sale took place about 4 minutes later, 5 minutes later, and then the buy took place about half an hour later, after the tweet. Not before, not hindsight, not a nice theoretical construction. It came in after the tweet took place. And that gave us a real quality to our analysis. It gave us an idea. Now, when the price drops, because I haven't retweeted, this might have vanished. I can't guarantee it didn't. But you can see that it bounced right off that target price, surprisingly enough. Came right off that target price, bounced right up to fair value, where the price then sold off to another key level, which was, of course, the big major support level, 44.45, major support. Tweeted out at 11 o'clock, traded at 12 o'clock, an hour later. We'll discuss fair value trading this afternoon in classroom, since it seems to be interesting to about 4 or 5 people, so that's usually better than I normally get for interests in subjects. So yep, fair value trading will be covered this afternoon in classroom due to public appeal.